So I don't know if you noticed, but since the stock market started crashing in 2022, many people now are suddenly stock market crash experts. They talk about the Federal Reserve, they talk about interest rates and all that kind of stuff. But I ask a simple question. If they really knew so much about the stock market crash, why none of them were talking about it a year ago? If you think about it, it's easy to talk about something after it happens, but it's not so easy to talk about it before it happens. And I get accused of that all the time, that I'm doing this just to kind of get views and play on people's emotions. But no, I've been doing this since pretty much August of 2021, way before the stock market really started crashing. This video I said, why Michael Burry shorted ARK, and I said why I'm personally also opening a short position on ARK Innovation and many other stocks. Well, ARK Innovation was $118, so you could see how early I was in this video, way before everything crashed. And this is why I only got 76 likes on this video. I got much more dislikes because it was so early and you couldn't say anything bad about Cassie Wood. Then I made another video, it was in December of 2021. The real market crash hasn't even started yet and the S&P was 4600. Now, I'm not a prophet and I could have been wrong and I could have been right, but I took some signals and some signs that really showed me where we were and why the stock market crash could potentially happen in 2022. I learned all those tricks from me studying stock market crashes before 1929, 1999, 2008. It's pretty much the same exact signals, the same exact scenario, and I studied those scenarios, and this is how I was able to anticipate the 2022 stock market crash before pretty much anybody else. And you may ask a question, why do you even need to know that stuff? Well, many people quote Warren Buffett for saying, be greedy when others are fearful. Well, how about being fearful when others are greedy? Very few people actually even do that. Why? Because it's called timing the market. This is how most investors are programmed. No, you can't time the market. I never tried to time the market. I was never 100% out, but I was able to save myself a lot of money by actually anticipating what's about to come based on what happened in the past. So let me begin. A stock market crash for me consists of two things, a bubble and you have a pin. Okay, now many people every year they call for a stock market crash, mainly because we have a big bubble. But the bubble can inflate for years and years and years without ever crashing. You must have a pin, you must have a catalyst to break the bubble, or the bubble would go on pretty much forever. Now in 2021, there was a huge bubble and there was a pin, which was the Federal Reserve. And this is why it was so easy to anticipate this stock market crash. Now the bubble itself, to determine if we are in a bubble, I look at two things. First one is valuation, which is very easy. The second one is very, very hard, and this is investors' behavior. This is something they're not going to teach you in college. Most people don't really teach that stuff on YouTube, but it's very creative and it's much more of you actually looking around than actually just seeing numbers and asking questions. This is something I was very critical of. Gamification of the market. This is not a game, okay? Now, 6 out of 10 Gen Z investors admitted to trading while drunk. This is pretty much crazy behavior. What does crazy behavior do? Overvaluation, and overvaluation creates a bubble, and then as you guys know, all stocks pretty much come back to fair value. So you had the Gen Z investor trading while drunk. You had Wall Street bets, which I was very, very critical of. I could go to restaurants, hear people talk about Robinhood, about GameStop, about AMC. None of this is pretty much normal. People don't talk about that stuff. Yet people were trying to say that investing for everyone and this time is different. Well, it's not for everyone. Can anybody fix their own cars? No. But just because pressing buy and sell is easy doesn't mean everybody can do it. Doesn't mean everybody has the guts and the personality to actually do it, and what to do when the stock market is actually going down instead of just going up. So none of this was really true, and it was a big kind of part of the bubble, and this is how I was able to see the investors' behavior. It's pretty straightforward. How do you know that you have a real estate bubble? When I was hearing a lot of people, everybody wants to be a real estate agent. You have real estate agent courses, everybody wants to be a real estate agent because they see a lot of people making money being real estate agent, and this is normally is a sign of a peak of something called a bubble. Same thing with the stocks. People hear their neighbors make a lot of money in stocks and crypto, so they want to do the same thing, and normally they're pretty much late to the party. This is how I determine with investors' behavior. Now, there's actually an indicator to determine that, and it's not the fear and greed index, not even close. It's my favorite indicator ever, which is actually margin debt. This is the margin debt yearly change in 1 year. Okay, now if you take this line here, we draw this 50% line. If you notice, whenever margin debt goes up above 50% in 1 year, what happened? We had the dot-com bubble crash, we had the 2008 financial crisis crash, and then we're having right now the 2022 stock market crash, which is only getting started. And this is something I was warning about in my videos. Every time it goes above 50%, it ends negative 50%. This is just the way it is. Why? Because whenever margin debt increases 50%, we have 50% more speculation, which leads to overvaluation, which also leads to what? A stock market crash. Okay, that's pretty straightforward. The second one is more on valuation. This is very simple. We had the third highest P in the history of the stock market. People were saying this time is different because the big tech, they make higher margins than before and more money. Every time somebody tells you this time is different, it's normally not different, okay? This is just how you have to think about it. Whenever you have something way above historical norm justified by pretty much nothing, it's normally a big lie, and valuations are easy to determine and they always come back to pretty close to historical average. Okay, now this is the trick. We talked about the bubble, but very few people were talking about the pin. What's gonna prick the bubble? If there's no pin, the stock bubble is gonna keep inflating pretty much forever. This is another video I made which only got 347 views. I said the Fed meeting drama and what stocks will outperform, prepare now. Now if you could look at this video, if I can maybe zoom it in a little bit, they were saying the Federal Reserve are gonna hold interest rates steady. They haven't even announced interest rates yet. Now if you had to know that they're gonna eventually announce interest rate, what I was talking about here personally, I was talking about the Bank of Russia. Russia raised interest rates 6.5%, the sharpest move since 2014. Why did they raise interest rates so much? To fight inflation. We had inflation, the Fed has doing nothing about it. All you had to do is go on Google and kind of type in, how do central banks fight inflation? By raising interest rates and tapering the balance sheet. Okay, you could have made another research, what stocks get hurt the most when rates are going up? And it would tell you what? Growth stocks. And this is how you could have avoided many of the Cassie Wood type growth stocks. Maybe you didn't sell all of them, maybe you just took a profit and sold 50 or 60%. You could have saved yourself a lot of money. But I promise you, all those signs and everything I showed you in this video is gonna happen again. It happens every 3-5 years, maybe every even 10 years, but it's gonna happen in your investment life. And whenever you see all those signs again that I showed you, you see signs of over speculation, you see signs of high valuation, which makes the bubble, and then you have to think what's gonna prick the bubble, and it's normally the Federal Reserve. And if the Federal Reserve is coming close to raising interest rate, you know what to do. You get prepared for it, and you don't listen to people that tell you you can't time the market. You're not timing the market, you're just knowing where you are. So this was my video for today. It was a little bit educational, so I hope you enjoyed it. If you liked it, please press the like button and maybe consider subscribing. So I hope to see you in another video.